Hello everyone, and welcome back to Daily Finance News. Today, we're diving into the ongoing banking crisis and looking at 5 banks that could potentially fail next. Remember to hit that subscribe button and the notification bell to stay updated on the latest finance news. So, without further ado, let's get started. The recent suspension of trading for First Republic Bank shares on the New York Stock Exchange shocked the markets and sent shares of other regional banks tumbling. Although rivals like PacWest Bancorp and Western Alliance Bancorp are trading at never-before-seen value levels, we're dealing with a crisis of confidence. Even 100% solvent banks are at risk if their share prices slump and customers withdraw cash, creating a self-fulfilling prophecy that can sink even the strongest of lenders. As the 2023 banking crisis unfolds, let's take a look at 5 banks that could potentially fold next. PacWest, PACW, shares of PacWest plunged after the regional bank announced it was considering all strategic options for survival. The Los Angeles-based bank's situation is emblematic of Americans' fears about the safety of their bank deposits. Despite a recent rebound, the stock is still down over 3/4 for the year. Western Alliance Bancorporation, WAL, despite releasing a press report detailing the bank's financial stability and announcing a dividend per share, Western Alliance's shares plummeted. The Phoenix-based firm has lost roughly 60% of its value this year. Zions Bancorporation, Zion, with the collapse of First Republic, Zions Bank has become the most leveraged major bank on the U.S. stock market. Investors have sent shares down 57% this year, leaving the 175-year-old Salt Lake City-based institution in a precarious position. Republic First Bancorp, FRBK. The Philadelphia-based bank has lost 67% of its stock market value this year. Republic First's risky financial strategy and abnormally conservative loan-to-deposit ratio are causing investors to question its stability. HomeStreet, HMST. This Seattle-based regional lender's shares have plummeted 80% this year. HomeStreet's high-cost structure and Tier 1 capital ratio of 9.5% puts the firm at an elevated risk of a bank run. While the 2023 banking crisis may not pose a serious threat to the broader U.S. financial system, investors are starting to realize that balance sheet strength has little to do with stock market returns when banks are involved. The U.S. Federal Reserve is showing no interest in saving smaller banks as it did in 2008, leaving shareholders with nothing. This situation presents a contagious problem, as markets can become a self-fulfilling prophecy. As investors believe that failing regional banks will leave shareholders with nothing, market prices fall, and the prophecy is fulfilled. The ongoing banking crisis not only affects investors but also has implications for the broader economy. The potential failure of these banks could lead to job losses and reduced lending, which in turn could impact economic growth. Small businesses and consumers may find it more difficult to access loans, resulting in a slowdown in business expansion and consumer spending. As an investor, it's essential to stay informed and monitor the situation closely. Here are some strategies to consider during these uncertain times. Diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different sectors and asset classes to mitigate risks. Stay informed. Keep up with the latest news and developments related to the banking sector and the economy. This will help you make informed decisions about your investments. Look for opportunities. Market volatility can create opportunities for investors. Keep an eye out for undervalued stocks or other assets that might benefit from the current situation. Seek professional advice. If you're unsure about your investment strategy during these uncertain times, consult a financial advisor for guidance tailored to your specific needs and goals. The role of regulators, such as the Federal Reserve, is crucial in managing the ongoing crisis. They need to closely monitor the situation and provide support to the banks when needed, to prevent further collapse and maintain financial stability. However, striking the right balance between intervention and allowing the market to self-correct is a delicate task. The 2023 banking crisis continues to unfold, and the impact on the economy and investors remains uncertain. By staying informed, diversifying your investments, and seeking professional advice, you can better navigate these turbulent times. Thank you for joining us today on Daily Finance News. Don't forget to subscribe and hit the notification bell to stay updated on the latest finance news. Give this video a thumbs up if you found it informative, and we'll see you next time. Hello everyone, and welcome back to Daily Finance News. Today, we're diving into the ongoing banking crisis and looking at 5 banks that could potentially fail next. Remember to hit that subscribe button and the notification bell to stay updated on the latest finance news. So, without further ado, let's get started.